and welcome. You tuned into Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, markets started lower and since then in a very tight range. It has been on the tentative side. At the moment, almost flatline with a negative bias on Nifty 50. So 18,385 odd levels. But it has been a day of lackluster trade and a negative kind of a bias on the market. When it comes to the bank Nifty, that is also on the flat line with a negative bias. So banks not helping much, and nor is the mid-cap universe, which is underperforming the key indices today. So advanced decline ratio, anybody's guess, the market breadth is on the weaker side. But we really look at some of the counters. Well, market is punishing on the basis of news flows, as well as also rewarding some of the counters, like Paytm is down and out after a large trade. And on the other hand, some of the other counters like our systems, because of the Blackstone buyout, is showing a great up move. In terms of some of the big counters, well, Tata Consumers is on the gaining side. L&T, HDFC Life, Adani Enterprises are some of the key gainers in trade today. Pavitra.
Hi, Nisha. So like you said, quite a quiet day. We are trading on the downside. And, you know, even in this kind of market setup, when it is so quiet with this negative bias, it is still the PSU Bank Index, which is the only one which is holding up in the green right now. So a little bit of strength coming through from there. A few of the FMCG names doing well. Yesterday's listings are once again gaining today. So take a look at BKG Foods. You have Global Health. These ones are piling on to the gains that we saw yesterday. On the downside, like Nisha mentioned, Paytm, of course, because of the large deal. But you also have Nykaa. You also have PB Fintech. So some of these new age companies are seeing some cuts. Nykaa, of course, has recovered significantly from the lows that we saw. It was down around 4% at one point. You also, on the downside, have the auto names. So the likes of Eicher, Tata Motors, and some of the tech stocks. So those ones will come up. The cuts in mid-cap tech are actually much larger today. But let's talk about the individual names now. Tata Motors trades lower after Jaguar Land Rover CEO Thierry Bolloré resigned, citing personal reasons. So Sonia is here to tell us more about that. Sonia?
Well, thanks a lot for that. As you rightly pointed out, this is a tough time for Tata Motors. Now, the JLR CEO has resigned from December end of this year. Thierry Bolloré, who was the CEO from 2020, has now put in his resignation, citing personal reasons. Adrian Mardell will be taking over as the interim CEO of JLR. Now, this comes at a time when there are a lot of challenges that JLR is facing, given the kind of demand crunch in the European region. In Q2, JLR, in fact, lowered its guidance for FY23. They also reported a negative free cash flow of £15 million because of the adverse working capital movement. The EBIT margins for JLR had fallen 230 basis points quarter on quarter. And at a time like this, the resignation of the CEO bodes as negative news for the company. There's no clarity on when the new CEO will be announced. And for the interim basis, there is Adrian Mardell. Remember, the stock as well has been a big underperformer this year. It's down 15% this year, while stocks like M&M, TVS Motor, etc. have had huge rallies. So all in all, disappointing information coming in for Tata Motors.
Right. Any rejig or any uncertainty at the top level is a cause of concern there for JLR. Now, Shriram Transport is gaining after the NCLT approves its amalgamation with Shriram Group. Long in the waiting, Abhishek joins us with all the details. Abhishek.
NCLT has approved the scheme of amalgamation and arrangement between the Shriram Group. So this NCLT order was given to them as of 14th of November. So the company has fixed 30th November 2022 as the record date. This is to determine the fact that how many shares of Shriram Transport Finance will be given to the shareholders of Shriram City Union Finance as well as Shriram Capital. As per the merger terms, we already know that, you know, for every 100 share of Shriram City Union Finance, shareholders will receive about 155 shares of Shriram Transport Finance. Back to you.
All right, Abhishek, thanks a lot for that. Shriram Transport Finance is up 4% as we speak. Another one which is surging in trade is our systems. This after Blackstone announces its plan to buy majority stake in the company. Now, Blackstone will be buying 52% stake from promoters and has also made an open offer for 48.33% stake. Blackstone will also launch a conditional delisting offer, and this is at a price of $246 per share. So we caught up with Satinder Singh Rekhi, who's CEO of our systems, to understand more. Listen in.
The rationale is that we have reached a point and we need a big partner who can take care of the company and take us to the next level of its growth. and take care of its employees, customers, and partners. Blackstone is a great partner. They are very good, employee-friendly with their other portfolio companies, and that's why we wanted to partner with them. And the promoters will be involved. How it unfolds, we will know as we go along. I will certainly be a strategic advisor to them, and as we go along, the role will develop a little more. Blackstone has a lot of expertise, so that has to be utilized into the company. It's always a dilemma, whether you do it when the wave is going up or other times. But looking at it inside, I think we needed a stronger partner because we are going to get into larger customer bases, so that required a heavyweight along with us.
All right, so some investments coming in by Blackstone. Of course, tech and IT space has been one of the spaces where private equity is really interested, but they want a delisted entity. We saw the entire saga of Hexaware and how it panned out earlier, and now this. With that, we'll slip into a short break on the show. But on the other side, we get you some updates on the IRDAI board meet that is likely to happen next week. Stay tuned for that.
Guys, welcome back. You're still tuned into Business Lunch. Now, an important update. The government, in its latest fortnightly review of the windfall gains tax, has increased the tax on crude by 700 rupees a ton. So it's currently at 10,200 rupees. And this is versus the 9,500 rupees a ton that we saw earlier. Export duties on diesel have also been reduced to 10.5 rupees from 13.5 rupees. This is per litre, and export duty on aviation turbine fuel remains unchanged. So it's at 5 rupees a litre, while no duty has been added on petrol exports. So Nisha, that's a roundup of the windfall hike for the the fortnightly review on that front.
That's very important, and also important flashes on our screen right now. We have seen the top brass changes, layoffs in many of the global giants when it comes to the digital space. And it was flashing on the screen that Meta has got an India head now appointed after the recent changes. So keep an eye out on that one. Well, sources also tell us that insurance regulator IRDAI's board meet is likely to be held next week. And in fact, the expenses of the management limit as well as the insurance regulations amongst other norms are expected to be discussed at that particular meeting. Yash Jain is tracking all the developments closely, joins us with exclusive details on what could be expected and what could it mean for the industry, Yash.
Well, that's correct, Nisha. So a crucial board meeting of the insurance regulator likely to be held on November 25th. The Insurance Advisory Committee, as per our sources, has recommended about 11 changes, 11 amendments on different issues expected to be taken up in the insurance regulators board meeting. What I've done is I've picked out 4 most important amendments that could come through out of these 11 changes suggested. I'll take you through each one of them. These 4 first of all are expenses of management limit, second one open architecture regulations for distribution, third one reinsurance regulations, and fourth one registration of insurance companies. To quickly take you through all of these, expenses of management limit, the insurance regulator is likely to discuss setting up a limit when it comes to expenses of management for life, general and standalone health insurance companies. The expenses of management is nothing but a sum total of the commission which an insurance company pays plus the fixed expenses like salaries. The regulator is looking to put a cap on the expenses of management, and that number could come through in this board meeting. Second one, open architecture. Banks as distribution agents could be allowed to tie up with 9 life, 9 general and 9 standalone health insurance companies. This number currently stands at 3. The third one, reinsurance regulation. This is quite crucial and could be a negative for the listed company GICRE. Essentially, the insurance regulator is looking to make some changes to the order of preference which currently favors GICRE. What the regulator is looking to do is to give foreign reinsurance branches some more flexibility, bringing them on par with GICRE when it comes to getting contracts. So that could be a little negative for GICRE. The fourth one, finally, registration of insurance companies. This could essentially bring amendments when it comes to private equity investments in insurance companies. It could determine the lock-in period for them, also relax certain entry conditions for private equity players. It could bring out amendments when it comes to the promoter classification, take the promoter classification threshold to 25% from the current 10%. Also, amendments may come in as far as lock-in periods for investors in insurance companies are concerned.
All right, Yash, thanks a lot for getting us all of those details. But with that, let's shift focus now to the Amazon versus Future Group tussle. Amazon is now seeking damages from Future Group in the context of its 1,400 crore investment in Future Coupons. So Ashmit is here to tell us more about that. Ashmit?
Right, so Amazon changing track now. As we understand, Future Retail is already before the insolvency bankruptcy regime, and towards that end, Amazon has sought to shift its position from now seeking, earlier it was seeking a performance of the contract, now it is seeking a monetary compensation by way of damages. What is that damages? Well, it is in light of the investment that they had made. They had invested to the tune of about 1,400 odd crore rupees into Future Retail's parent company, Future Coupons. And they mentioned, they raised this issue today before the Apex Court, saying that in light of this development, they should be allowed to proceed before the arbitral tribunal. The Future Group, however, their counsels were also present in court. They argued against it, saying that this dramatically changes the very contours of the arbitration process. Initially, they were seeking performance of the contract. Now they are seeking monetary compensation. This changes dramatically the contours, and therefore there is a fresh question required on whether or not such an arbitral proceeding is maintainable in the first place. The Supreme Court, however, frowned on this argument by Future Group, pointing out that while India aspires for a global reputation, it cannot seek to scuttle such arbitral proceedings, that these arbitral proceedings need to be respected by all the parties, especially the signatories to that arbitral agreement. Also going on that this is something that the court cannot watch silently, and that the court will guard against stultifying of such arbitral proceedings. So strong comments those from the Apex Court. This matter will resume hearing once again next Friday. Back to you.
All right, Ashmit, thanks for all the details. And this particular turn really emphasizes on the point that this legal tussle is not ending anytime soon. So keep an eye out on this long-running legal tussle, which has changed the texture of the sale and M&A at Future Retail. And for all our car enthusiasts, now here's something to look forward to, really, because Jeep launches the 5th Gen Grand Cherokee in India. Now, the car is priced at 77.5 lakh rupees ex-showroom, and upgraded features include the 5th Gen Grand Cherokee gets 33 connected features such as vehicle monitoring, smart watch extension, Alexa voice assistant, remote vehicle management, and also 24-hour surveillance. It also has an over 110 safety features, including level 2 ADAS features, adaptive cruise control, active lane management, and also lane departure warning, and also deliveries for this particular car to begin at the end of this particular month. So good news coming in for all the car enthusiasts, Pavitra.
Oh, absolutely. Looks like a nice one over there, and exciting visuals coming in on that one. But with that, we're going to get into a short break. When we come back, the UK is likely to announce spending cuts and raise.
Welcome back. You're watching Business Lunch. A quick look at the market. And yes, Bank Nifty is the one which is absolutely on the flat line, trying to move over to the green side, while Nifty 50 sensex are also flat with a negative bias. But keep an eye out on State Bank of India. That has seen a huge amount of buying in the last few minutes of trade, and that's like a big mover coming in, which could really cross that Bank Nifty to the green line. All right, moving on then. Inflation in the United Kingdom surged to a 41-year high as surging energy bills see prices rise by 11.1% in the month of October. Now, Chancellor Jeremy Hunt is in his autumn statement later today is expected to announce spending cuts and also raise the taxes, effectively ushering in another austerity program for the country. In fact, CNBC's Arabile filed this report on the energy crisis and inflation in the UK.